Hi, I'm Jeff Hirsch. I'm here at the Money Show with Steve Hochberg. He is the Chief Market Analyst at Elliott Wave International. It's elliottwave.com, correct?
That's right.
All right. And so what is an Elliott Wave and where are we in it now? First, tell us what an Elliott Wave is.
Elliott waves were discovered by this man named R.N. Elliott, who was an accountant back in the 1930s. And he came down with a physical malady, and he was at home and recovering, and he decided to spend his attention looking at the markets because he had nothing else to do. And he noticed that there was a natural development of human psychology as it went from pessimism to optimism and back again that traced out patterns. And so what he did was started chronicling.
Big fan of patterns.
Yeah, big fan of patterns. And he chronicled these patterns, and they were consistent across markets. And so what he's really looking at is the natural development of human psychology. And they trace out these patterns from pessimism to optimism and back. And
mass cultural behavior movements of people in the market.
Exactly. And so if we can determine, we can't see the future, but if we can determine where we are in the present, it implies something about the future, and we can probabilistically make
a line from the past through the present. Gives you a good look at the future.
It gives you a peek around the next.
So what is the shape of the Elliott Wave, and where, first describe what it is. There's a bunch of letters and numbers, and how do people manage it?
Well, basically there's 5 waves in the direction of the one larger degree trend. So you're just looking at 5 waves moving up or down.
Okay.
And so once you determine where 5 waves end, then you go into a correction. And so in terms of the stock market, we think we're near the end of the 5th wave, the 5th wave being the move into the January high, and we're looking for a major correction here now in the stock market going forward.
So you guys are pretty bearish.
We're pretty bearish.
Based upon Elliott Wave, where we are. So we're at the end of wave 5, which is the end of the bull market.
End of the bull market. Now it's going on at all degrees of trend, from millennial down to quarterly, down to yearly to hourly. And so they're all moving together right now.
And where does the wave tell us we're going to go, say on the Dow or the S&P or something like that? What's the levels that it calls for us returning to?
Well, from the 2009 low, we've had a 5-wave pattern. It's very clear to us. The end of that 5-wave pattern portends a move back below the 2009 low. So that's the first target we have. It's not going to happen overnight. It won't happen over a month.
64.70 on the Dow?
It was around 64.70 on the Dow, exactly.
That's a hell of a bear market.
Well, I think in percentage terms, you're going to have a bigger decline than the percentage terms from 2007 to 2009. That was about 54%. So,
and when do you expect that to transpire?
I think over the next several years. A low probably around 2020, 2022, somewhere in there.
When is the last time you've seen 2 back-to-back drops like that in that time frame?
Well, the S&P 500 from 2000 to 2002 dropped 50%.
Okay.
And the S&P 500 from 2007 to 2009 dropped 54%. So you've got comparable moves within that time span. We think this is the 3rd move in that development.
And what does that relate to in previous histories? That kind of 3rd wave down? Is that like the 82 low?
Going into the 82, we had a very sideways bear market from 66, 68 into 82.
But there was 3 bottoms there.
There was 3 bottoms.
May 1970, October or December 74, and then August 82.
Exactly. And so, or it could unfold more like the 1929-1932 experience, where it was just one big bear market.
Right.
89% down in the Dow, and you made a low at that point.
And then the lower move in 32.
And then the lower in 32, and then we rally from there.
All right, that's a little scary, but it's what Elliott Wave is telling us. So thank everyone for joining us, and thank you, Steve.
Thanks.